Joined by Erin Longino, who is our lead student loan advisor. And we are going to talk about all things going on with federal student loans at the moment. Those of you who are following the news have a sense that there's been some huge changes. And the question that we're hearing all the time is, how does this affect us? What can I still do with my student loans? I need to enroll, I need to consolidate, I need to apply for loan forgiveness. So we're going to lean on Erin today to tell us all the things, or kind of how to interpret what we're hearing in the news, what's happening today, tomorrow, and in the future. I am going to sort of moderate today and keep an eye on the Q&A box. So if you have questions, please type them in there. I know you usually get bombarded, so if we don't get to your question, you will also have a method of how to get in touch with our advisors to ask individual specific questions. Also, we have added a QR code on every slide. So during this presentation, if you want to sign up for a free loan review with one of our advisors, use that QR code. It'll take you right to the Calendly link. So without further ado, Erin, I'm going to ask you to take it away.
Hello, everyone. As Beth mentioned, I'm Aaron Longino with Silver Lion Student Loan Advisors. Today, we'll speak about student loans, federal student loans, plans and programs, historically issues that people have enrolling in these plans and programs, and a bit about what's going on today. We won't speculate, but we'll kind of give you an update about what's going on in Washington as it relates to federal student loans. So when you speak about student loans, most people want to know about student loan forgiveness and student loan forgiveness programs. What the Department of Education doesn't tell you is that 98% of people that actually qualify for these programs, they never get it. Some of the bigger issues are administrative difficulties, regardless of your political affiliation. Every side of the aisle has their ideas as it relates to the Department of Education. Those ideas sometimes conflict with one another, and it's borrowers who are usually stuck in the middle. The biggest issue that's always been with forgiveness programs, regardless of who's in the White House, are servicer issues, or the states. Servicers are just institutes of the state. Your Mohilas, your Nail Nets, your Great Lakes, these are all servicers, the people you make your payments to for your federal student loans. They've always been and will continue to be the biggest hurdle when it comes to student loan forgiveness, whether saying they never received anything or enrolling people in wrong plans or programs, or actively, in Mohila's case, suing over student loan forgiveness programs. It'll always be the servicers. You have loan program issues, meaning people aren't in the correct program or have the right plan to satisfy their desired program, and borrower qualification issues. You'll always run in to people who, while they as the borrower qualify for student loan forgiveness, their loans do not. So when we say student loan forgiveness, what do we mean? Student loan forgiveness essentially is a deal that you make with the federal government to repay your student loans. The Department of Education says if you either make 120, 240, or 300 qualified payments, depending on the program you're enrolling into, at the end of that repayment period, no matter how much is left, it'll all be forgiven. You have to have federal loans. Those federal loans must be direct loans. You must repay those under a qualified plan. And for those who qualify for public service loan forgiveness, you have the added qualifications that you work for a qualified employer directly, meaning they pay you directly and not through an agency. They'll say work full time, but they only require 30 hours a week on average, and that time can be cumulative between more than one employer. So this is the difference between a qualified plan for a forgiveness program and just your standard or default repayment. Everyone thinks when they get that bill in the mail when their student loans become due that that's just what they have to pay. That's their monthly payment. That's what they have to make. That isn't the case. The department has 70 different options for repayment. That's just a standard or the default repayment plan. If you see here, this is a family of five. They make about $55,000 a year adjusted. So that's what they ask for. And they have about $50,000 in student loan debt, your average borrower. Just that standard default repayment bill that they received in the mail, this borrower would be expected to pay $530 a month, wholly unaffordable for a family of five making $55,000 a year. Over the course of repayment, they'd be expected to pay about $63,638, although very rarely does anyone repay a standard repayment just in 10 years. Student loans will typically, because of interest, double over the course of repayment. Your average repayment period is 20 years, but your monthly payment is calculated as though you have it repaid after 10 years. That same borrower, all things being equal, in a qualified plan for a forgiveness program, would pay over $400 less a month. It's over $4,000 a year. Over the course of repayment, where your standard or default repayment plan borrower would be expected to pay over $63,000, this borrower would only have paid $14,160 over the course of a 10-year repayment period. At the end of that repayment period, assuming this person was properly enrolled in a public service loan forgiveness, they'd have about $49,478 left. That's the amount that the Department of Education expects to forgive federally tax-free. That's the difference in a qualified plan and a non-qualified plan.
Aaron, a question just came in. I logged on to Nelnet today. I am in an income-driven repayment plan, but I see that my payments jumped from my current income-driven amount to the standard payment amount in June, and I can't afford that payment. I think that's more of a statement, but what's your...
It is, but I can hear the question within.
Okay.
So it sounds as if you missed your recertification date. Qualified plans, technically, they're for 12 months at a time. They have to be recertified annually. If you do not recertify your plan, they'll take that payment price away from you and give you a standard or default repayment plan, which is usually one of the three plans where you pay the most monthly and over the course of repayment. Have your loans reviewed, but it sounds like you missed your recertification date.
Should we be expecting income-driven repayment plans to be discontinued because SAVE was discontinued, or will there be other IDR plans that we'll be able to use?
Short answer is there will be qualified plans you'll be able to use. Let's get into this. It's coming in a slide, but let's get into it since we have a relevant question. So to answer the question that you asked, no, you shouldn't expect income-driven repayment plans to go away. Now, to answer the question that I think you were asking. So recently, the courts have said a number of things. They've said the Department of Education cannot unilaterally calculate how student loan payment plans, how they charge borrowers monthly and how they forgive loans. The court have said that there's a qualified plan that went through what I like to call the schoolhouse rock method of government. It started as a bill. It was passed by Congress. It was signed into law by a president of the United States. This bill that went through Congress and this income-driven repayment plan was specifically written so it has the ability to offer student loan forgiveness. It was specifically written to be for a specific amount of time before student loans were forgiven. Public service loan forgiveness. was passed by Congress, signed into law, excuse me, by a president of the United States. This is how laws work. Uh, Congress controls the purse strings as far as calculating plans and offering forgiveness to plans. So what the court has said, it hasn't done away with all income-driven repayment plans. The SAVE plan was unique in it recalculated what the IRS calls discretionary income. This is what qualified plans are based off of. It recalculated the time frame in which student loans were forgivable. And the Department of Education has said, or excuse me, the courts have said the Department of Education doesn't have the authority to do so. Conversely, any other administration that comes to office by the court's own ruling cannot unilaterally get rid of student loan forgiveness because it was passed by Congress and signed into law by the President of the United States. Because of that, the laws that, or excuse me, the qualified or income-driven repayment plans that did not go the congressional route, they don't have the authority to offer forgiveness. So they can't offer forgiveness. They can still offer a lower monthly payment for those whose payments are unaffordable, but they no longer have the ability to offer forgiveness at the end of your repayment period. Just the plans that were created unilaterally by the Department of Education. This has nothing to do with the qualified plan Congress passed or public service loan forgiveness or the plan that was created for public service loan forgiveness, or actually before public service loan forgiveness, but in the same vein as public service loan forgiveness. It's confusing. I know. It's why we're here. If you have specific questions about your specific plan, go to wherever that QR code is, sign up for a loan review, and we'll be very specific whether your plan is able to offer forgiveness and what needs to be done so that you can take advantage of it.
I think you opened a can of worms, and I'm not going to read. We I think 10 questions just came in, all with the basic same question, saying pretty much, when will the courts decide on SAVE? This was already approved by Congress. How can they just pull this out from us? Trying not to panic.
We can X most of those questions out immediately. I'll take the last one. Don't panic. There isn't anything to panic about. Every 4 years, it seems, we change administrations and we go through this. We've been through this almost same exact scenario. SAVE is already gone. It doesn't exist. Can't calculate a monthly payment on SAVE. Can't have loans forgiven. Anyone in the SAVE plan, they need to change their plan. Congress did not pass SAVE. It was created by the Department of Education unilaterally. It cannot continue. Get SAVE out of your student loan vernacular, if you will. It's gone. If you're in a SAVE plan, you need to switch your plan to a qualified plan. The simple way to say it is SAVE is not a qualified plan. As a matter of fact, that's what we're going to say from this day forth. SAVE is not a qualified plan. In order to have your student loans forgiven, whether it's under public service loan forgiveness or student loan forgiveness, you need to be in a qualified plan. It's always been a requirement for forgiveness programs. So as far as that aspect, is par for the course. Public service loan forgiveness hasn't changed. Student loan forgiveness hasn't changed. The only thing that's changed is that they're enforcing qualified plans. SAVE is not a qualified plan.
Okay, I'm going to do one more, then we'll go on. I received a confusing email from Mohila about my loan and my recertification. My new recertification date is December 2026. But my loan states that I'm on the SAVE program and working towards PSLF. I graduated a year and a half ago. Unfortunately, Mohila has not been much help. Should I continue paying my monthly amount, and will this reduce my principal? What does all this mean? I'm so confused.
So I'm going to answer this question extraordinarily carefully. I would never tell anyone, don't make a monthly payment. You don't want your loans to go into default. But if you are on a SAVE plan, then you're not required to make monthly payments. You're in a forbearance. They can't accept a payment under the SAVE plan. Even if you send them money, they won't send it back. They'll hold it and apply it till after your loans are moved from the SAVE plan. You need a program change. You are not working towards forgiveness in a SAVE plan. The letter is confusing and misleading because it's outdated. They haven't updated it. You are not working towards any forgiveness whatsoever while you're under SAVE, because SAVE, remember these words, is not a qualified plan. So you can no longer even make a payment towards SAVE, let alone a qualified payment. Have your loans reviewed. We'll be more than happy to go over with you what your options are.
Okay, so let's move into some new topics, and I will get to as many of these as questions, I promise.
So this is where we should have began this conversation, but it was a relevant question, so we take them as they come. So if you're in a SAVE plan, long story short, you're not able to make payments under that plan. You're not working towards anything. You need a program change. The time in the SAVE plan, if you're already in the SAVE plan, that time in forbearance accrues interest. It does not count towards any type of forgiveness, and is not a qualified plan. Now, there are people who are applying for plans that were never actually enrolled into them. A lot of you, especially if any of our clients on here, you may have recently got an email, which is why I'm making this distinction, or a communication. I don't know how they send everyone communications. They said you're in a 60-day forbearance. If you got a 60-day forbearance notice, that's an administrative, or what we call a processing forbearance. For 60 days, you will not accrue interest, and that 60-day window will count towards the forgiveness of your loans. Conversely, there are people, the questioner mainly, they got a letter saying that their recertification was pushed back until the end of next year. That's an absurd amount of time. That means none of this period of time is counting as a qualified payment. You're wasting qualified time towards the forgiveness of your loans. If you got one of those absurd recertification date letters, you need your loans reviewed, and a program change is likely in your future. You're wasting qualified time. Now, there are some people that may have an increase in their loan amount due to the stripping of the ability to forgive loans under certain plans. Those people can't afford what their monthly payments will be. If that's the case, there isn't anything wrong with taking the time you've been given to recertify your plan and keeping that lower payment for as long as possible. It isn't going to count to anything, but it isn't hurting you negatively. You're not working towards forgiveness, but you wouldn't be anyway if you're unable to make your monthly payments. And at least this way, you are getting negatively dinged towards your credit, or if you're using forbearances, they are accruing interest, or you still have the possibility to default on your repayment option, which can lead to the worst case scenarios where federal student loans, as it relates to student loans.
So it looks like 3 questions came in a row that all have a very similar topic. So just to restate, what I think you're saying is, if you're in SAVE and you have a $0 payment during the time that you're in SAVE, you're not working towards public service loan forgiveness. So if your goal is to get to that 120 payments sooner rather than later, you need a program change. If you are happy with this little hiatus of $0 payment, knowing that you've extended your period of time towards loan forgiveness, you do want to do a program change. Is that accurate?
Yes, mostly. So this is a very important distinction. If you're in a SAVE plan after July 18th, 2024, you do not have a $0 a month payment. You are in a forbearance. There are people that have $0 a month payments in their qualified plan. Those count towards the forgiveness of your loans, excuse me. And if it was set up correctly, there should be a built-in mechanism that doesn't allow interest to accrue above your monthly payment. That is not the case on SAVE. After July 18th, even if you had a $0 a month payment, you no longer doing, you're in forbearance. But everything else is correct. If you're looking to make qualified payments, you need a program change. SAVE is not a qualified plan. If a qualified plan or any other plan would be wholly unaffordable, you can't pay what you can't pay. There's nothing wrong with taking this time that they've given you to either find other options or for them to revamp their system. Um, Maybe they'll come up with something affordable. I've seen stranger things happen, but there isn't anything wrong with you taking the time provided to see what your options are while you're in a standstill. You're in a forbearance. You don't actually have to make payments. So what are your options for loan forgiveness? This is a question that we get 100 times a day, really all day, if I'm being honest. People, as a people, we panic when we see change. Your options for loan forgiveness are what they've always been. You must be in a qualified plan. Qualified plans have changed. If you need to know what a qualified plan looks like for you, sign up for a loan review. We'll be more than happy to go over that information specifically for your loans. But nothing has changed. You need to be in a qualified plan, which is an income-driven repayment plan. You need to recertify that plan annually, or you are not making qualified payments. And especially now, you need to create a record of everything that you do. If some of you may have noticed, you're not able to apply for income-driven repayment plans at the moment. There's a pause on processing. This is especially when you need to create a record, because this is when things are lost or never received. So what you need to do for your loan forgiveness is what you've always need to do. Qualified plan, recertify, keep a record. Now, things may take longer than normal. It was never a quick process. It's always been about 3 billing cycles. And that isn't even including the public service loan forgiveness enrollment time, which is something else you need to do. Make sure you're enrolled into public service loan forgiveness if you're someone that qualifies for it. Things may just take longer. It may be a little more difficult to navigate the student loan water, so to speak, but that's why we're here. If you're confused and want questions about your loan specifically, sign up for a loan review. We'll be more than happy to go over that information with you.
I've got a two-part question. I'm not a government employee, so I'm assuming he doesn't qualify for PSLF. If I make payments under my standard plan, will my loan be forgiven after 10 years? That's part one. And part two is, am I correct that if I have $12,000 or less left to pay on my loans, that will be forgiven?
No and no. So part of what got the SAVE plan thrown out was, it still would be no. But the SAVE plan said if your original balance was $12,000 or less, not what you have left, your original balance, your forgiveness will revert from 20 years to a 10-year repayment, whether or not you qualify for public service loan forgiveness. A standard repayment would never forgive loans. You're expected to have paid in full by the end of your 10th year. If you have not, which your average borrower won't, you still pay until you've paid your loans off. The standard, it does not, nor has it ever offered forgiveness.
All right, here's another one. I'm currently in SAVE. I have 26 payments left for loan forgiveness. I took out my loans in 07. Is my only option for new plan of forgiveness the old IBR? Then the next part of this is, I was on payee and then repayee. I don't want to switch to 300 payments if I don't have to. What should I do?
You don't have a choice. SAVE is not a qualified plan. Repayee became SAVE, so it doesn't exist on its own anymore. Payee no longer has the ability to offer forgiveness. You don't have a choice. Unfortunately, if you're someone that doesn't qualify for public service loan forgiveness, I wish we could have spoken to you back in June. But it doesn't sound like you have a choice. Although I'm speculating, which I don't like to do, have your loans reviewed and I'll be a lot more specific. So defaulted loans. When you default on the repayment plan that you agreed to repay your loans under, that means you haven't made a payment for 270 consecutive days. You lose what's called your federal privileges, your ability to give federal student loans. And also, if you're someone who receives a tax return during tax time, they'll take that tax return or offset, they like to say, but they'll take the whole thing. They'll only apply between $5 and $50, usually to the interest of your student loans. And your loans will no longer be with the Department of Education. You're with a collection company. This collection company charges you 24% interest, 18% compounded daily. And that isn't even the worst case scenario. Worst case scenario is what happens next. The last stage of default is garnishment. There's an actual garnishment against you in a court of law. They'll garnish 15% of every taxable income you receive, whether it's employment income, unemployment income, most investment income, for the foreseeable future. It's extremely difficult and extremely expensive to get out of garnishment. A lawyer would typically charge between $3,000 and $5,000, and that's here in Ohio. I can imagine what it would be in some of the bigger markets. But you want to get out of default. You want to avoid default, but you want to get out of it as quickly as possible. They'll only tell you about rehabilitation programs, which is you making a deal for a fair and reasonable payment that you make to a collection company for 9 consecutive months. The problem is they can resell your debt up until the 5th month, up until after the 5th month. So you'll make those first 5 payments in good faith. You'll go to make the 6th, and they would have sold your debt to another collection company. Not only will you have to find it, but then you'll have to begin the rehabilitation from day one, all over again. It's a nightmare. You want to avoid that whenever possible.
Quick question. What makes a loan qualified? Does the loan being subsidized or unsubsidized have anything to do with that?
No, absolutely not. What makes a loan qualified is if it's a federal loan, if that federal loan is in the direct loan program, and if it's in a qualified plan. Loans that do not qualify on their own are Parent Plus loans, Perkins loans, FIFO loans. These loans don't qualify for forgiveness whatsoever. None of them are direct loans. It must be a direct loan.
So a question came up, and we'll talk about how we can help in a little bit. But for those of you on this webinar, and I know a lot of you are, who are working with our advisory team already, and you're participating in the monthly advisory services, our team relies on you to send us updates and loan details that you're getting from the Department of Education for your loan servicers. We don't have access to that directly. So we can do all the work for you, and we can tell you what needs to be done, and we can take you all the way soup to nuts from beginning to end. But like the IRS, we don't have access to your loan account. So that was a great question that came in. So we ask everybody to send or upload everything that they receive from the Department of Education or from the servicers, because how we work best is that once we see what's going on with your loan, we will take the steps necessary to take you to the next level. Like, a lot of questions are coming in about when will the new IDRs be available? When can we enroll? That's, kind of what we're looking at day in and day out. So for those who are working with us, who today we cannot move them, but we will move them as soon as those new programs open up. That's the benefit of being part of our ongoing service, so that, we are keeping an eye on your loans, and we are keeping an eye on what's going on in Washington, and we know when the appropriate programs are opened up. All that we need from you is to forward to us or upload onto your portal the communication that you're getting. So we can see, some of these communications are really important, some of them aren't, but upload everything onto your portal, or reach out to your advisor so that we see what's happening with your specific loan. We know globally what's happening with federal student loans, and we can make sure that as soon as the programs are open up, or as soon as deadlines are available, that we're going to get you to the next step. But we need your help just to provide us what information you're receiving from your student loan servicer.
So, as I mentioned in the beginning, 98% of people that actually qualify for public service loan forgiveness, they never get it. Usually, not always, but usually it's because while you as the borrower qualify, your loans do not. And I've heard and seen it in the Q&A a couple of times, people saying government worker, government worker. Public service loan forgiveness isn't just for government workers. It's for anyone who works for the government, local government, city or county, state government, federal government, even tribal governments, our Native American neighbors. We have people that have gotten hundreds of thousands of dollars of loan forgiveness because they work at tribal casinos, which are a part of the tribal government, therefore qualifies for public service loan forgiveness, or people to work for 501c3s that are tax exempt. Doesn't necessarily have to be a 501c3. There are other 501s that qualify. The important part is that you're not a political organization and that you're tax exempt. But it isn't just government workers. But still, most people that qualify for it, they never get it. Usually because they qualify as the borrower, but their loans do not. So there is what's called a temporary extended public service loan forgiveness. It's essentially you say to the Department of Education, look, my servicer has failed me. I was in a plan that I was paying more than I should have under a qualified plan, and I'd like that time to count. Most people that have their loans forgiven under public service loan forgiveness actually have them forgiven under a TEPSLF. It's to get non-qualified time converted to qualified time. Doesn't apply to everyone. Isn't always a good fit for a particular set of loans, but it is one of the best additives, if you will, or corrections for public service loan forgiveness that's available. If you think that it may apply to you, have your loans reviewed. We'll take a look at your loans throughout repayment and see if it's something that can be applied to you.
If your loan is with a collection agency, can it be included in a bankruptcy?
Neither am I, nor will I pretend to be a lawyer. My expertise lies within federal student loans as opposed to within the courts. That would be a question better addressed to a bankruptcy lawyer. I wouldn't want to give you information that I shouldn't be given because it is in my area of expertise. But more importantly, to your situation, I wouldn't want to give you wrong information.
I no longer work and I don't have any income. What are my options for student loan repayment? Can I qualify for 0 monthly payment under an income-driven plan? Also, does having a 0 taxable income affect my student loan status?
Yes to the first part, no to the second part. If you don't have any income, any qualified plan is going to calculate you to have a $0 a month payment. A $0 a month payment counts as a full on-time payment, is reported as though you're making a full and on-time payment. And if you're in a qualified plan, your loans will be forgiven at the end of your repayment period if you recertify your plan annually. So yes, you'll qualify for a $0 a month payment. But have your loans reviewed. Let's take a look to make sure your loan type can be enrolled into a plan that would offer a $0 a month payment. What is it that we do? How are we able to help? The very first thing, if you haven't noticed, we would want to do is to review your loans. Without reviewing your loans, we're just speculating, which we're not in the business of speculating. We deal in facts as opposed to speculation. We want to see how many loans you have, how much they are, who holds them, and the status that they're in. That'll give us a better idea of what, if anything, we would suggest moving forward. We'll explain what stood out to us and what you can do to correct that issue. We'll then run a projection, tell you exactly what your monthly payments should be or could be, how long in repayment the Department of Education expects you to have left, and how much of any they expect to forgive at the end of that repayment period. At that point, you're free to either take the information we've already given you just for us to review your loans. It doesn't cost you anything other than the time it takes to do so. And you can do these things yourself, or you can hire us to do them for you. For that part, we have a fee. Depending on what needs to be done, we'll be very upfront about that fee. You also have the option of continued service. Continued service is not only will we recertify both your plan, and if you're someone that qualifies for public service loan forgiveness, we'll recertify that as well. They both have to be recertified annually. We'll be here through times like this. All our clients that were in the SAVE plan that use us for continued service, we switch those plans months ago. Most of them should be fine. They're not caught up in all of this confusion with what plan is what, which plan is which. Soon as SAVE was thrown out, as a collective, we had the foresight to use the only plan that was passed by Congress. We knew that plan couldn't unilaterally be taken away by any administration. They don't have to deal with that. Now they're making qualified payments. They're an affordable plan. And it's business as usual. We'll do the same for you. When new plans and programs come out, they're the first ones to know. We usually hear about the months in advance, and we're able to set the stage to make sure that they qualify for those programs. When programs are taken away, we'll find the next best option. We're here for you until either you fire us or your loans are forgiven, whichever comes first. It's usually the forgiveness, but we go away when asked. And
Yeah.
anything else federally student loan related?
All right, I have a couple more. This is a little bit longer. I'm concerned that I'm making payments on my IDR plan through Mohila. I received a notice of a repayment schedule change from Mohila stating that my repayment plan is standard and will begin February of this year. But there was no way to make a payment online. I called and talked to the customer service who said I should wait to make payments because they won't count towards PSLF. I said I wanted to continue to pay, but she said I would have to pay the same amounts again in order to buy back those payments.
So I'm going to try to say this carefully. When you call your servicer, the person that you speak with is just someone working a 9 to 5. They're looking at a computer screen. They're answering pre-populated questions, essentially. They may not always know the ever-changing nature of these student loan plans and programs. If you're someone that was in a SAVE plan, you cannot buy back time under SAVE. That time from July 18th forward is lost. There's nothing you can do about it. It sounds as if they've gotten you to agree to change to a standard plan. You shouldn't have just gone into a standard plan. They can't take you out of one plan and into another without you agreeing or giving the appearance of agreeing. That's not a qualified plan. If your goal is public service loan forgiveness, you do not want to make a payment under a standard repayment. That is not a qualified plan. You want to be in a qualified plan so that you can make qualified payments towards public service loan forgiveness. And it doesn't sound like you're in one now.
If the recertification date was missed, are you SOL for a year?
No, you're SOL from the 10 days before the date you missed it until you recertify. Recertify immediately. Have your loans reviewed. We'll take a look. We'll make sure that you can actually recertify in the plan you're in. You may need a program change, which is likely.
Have you had cases of borrowers moving abroad? How do they typically handle their student loan payments and their U.S. address requirements?
No requirements that you have a U.S. address to make a payment. Maybe what you mean is whomever they bank with overseas, they're not able to. I don't know. I don't even understand that question, if I'm being honest. There are people that live overseas that make their student loan payments and other payments to American companies the same as they always have. If what you're asking is, no, I don't even know what you're asking. It has to be an American school to take advantage of these programs, but you could have loans from Case Western Reserve, which is a school here in Cleveland, Ohio, live abroad in Japan and make your student loan payments. They're not going to not take your money.
Here's one last one, which I think might lead to a good answer on just they applied for a program change in last November, but according to Mohila, there is no time frame because they're so backed up. One, is there a way to expedite that? I know what your answer is, but two, she's one payment away from her 120 payments for PSLF.
Have your loans reviewed immediately. What it sounds like, for the benefit of an answer, is you're trying to recertify in a plan that can't offer you forgiveness. If you're one payment away, well, we tell our clients that are 12 payments or less away from forgiveness because qualified plans are for 12 months at a time. Make those payments if you're financially able to. Make those payments now so that we can apply for your forgiveness and place you in a forbearance. Once you get that requisite number, whether it's 120, 240, or 300, you're done with student loans. You have fulfilled your legal obligation under the agreement that you agreed to repay your loans under. You don't have anything left to do. But it sounds like you're trying to recertify into a plan that you're not able to recertify into. You need a qualified plan so that you can make that payment immediately and just be done with this.
All right, the questions are coming in and we appreciate all of that. Please reach out to one of our advisors. You could use the QR code, you can call, you can email. We know there's a ton of questions out there and that's what we're here for. We know this is a very trying time. There's a lot of panic, there's a lot of uncertainty. So, this is a time we want you to lean on us and we want to help you in any way that we can get the relief that you're eligible for, because we know that there's nothing more stressful than uncertainty about such a major financial burden in your life. So we are here for you and I really appreciate your attendance today and your questions and your, the interaction. So thank you all very much and have a great rest of your day. Thanks, Erin. Bye, everybody.